Today we're going to talk about 506C Reg D filed SPVs and what's legal to solicit and what isn't. My name is Rob Ellis, Pink Development and Construction. I'm in Miami, Florida. This topic is on a fake Miami, Florida development. Let's say I was going to do it. We're going to go through what you can go through. So what is permitted? We're going to ask ChatGPT, what is permitted to solicit for a 506C Reg D filing? What specific words would be okay and what isn't to the general public? What information must I keep confidential? Post accreditation verification? And what can I post publicly? So under this, a Reg D filing, a 506C, which I just filed my first one for a hotel development that we're doing, and you're only allowed to accept investments from verified accredited investors. So what is it then? How do I differentiate it? And if I don't want to copay $1,500 for an attorney or a general counsel, what is it that's allowed? What information can I advertise? General opportunity details. We're raising capital for a luxury residential project in Miami. That's okay. Investment highlights, projected returns, target IRR, exclusive geographic focus, the business strategy, where I'm located. So if I'm doing unlimited height districts, if I'm going to raise 10 or $20 million in an SPV and buy an acre of land in Wynwood or in Edgewater and go vertical on it, I can say that we're focused on high margin, unlimited height districts because land is worth what you can put on it. I'm allowed to say that. In addition, you could say my track record. Our team has built over $100 million in high-end developments. I've got 5,000 projects. We got this much on our last deal. We hear this from accredited investors. We hear this from institutional level investors, right? DM us to review financials, request an investment deck. This is for accredited investors only. Those are all public solicitation, and there's different forms of it. What about video content more specifically? We'll keep going into that, but that's my first thought. What I can't say is it's guaranteed because nothing is risk-free investment. I can't say no risk involved, can't miss. Those are absolutes, very simple. Act now can violate it. If I say claim SEC endorsements or use unverified performance data without clear disclosures. So typical deals, I can review other deals of other developers. I can do fake deals. If I built the Aston Martin, what would it look like? If I built Waldorf Astoria, how much was the land and what would that look like? We do that all the time. I'm not soliciting for money. Once an investor has been verified, I can provide them with more confidential information, which is what's in my vault. A vault goes through detailed financial projections, investment structures, exit strategy specifics, property specific address details, specific business strategies, and legal contracts. That would be more like my actual organized documents. Publicly permitted post accreditation language, pro forma financials, timelines. It's all about disclosure, exit assumptions. After verifying, I can include some of these. I still argue that targeting exits, I could say that in a different way. That's like this area sells for, right? New construction condos go for or are listed for, or here's a condo next door that was just listed for this much. Always include a disclaimer. This is not to offer or sell securities. Offer are made only to verified accredited investors through official offering documents. Use vague, exciting new build instead of invest now. Say we want $100,000. Ensure that we meet SEC standards. We have third-party services. We're building luxury spec homes in Miami's hottest neighborhoods. DM to review financials and explore partnerships. This is what we're controlling key Miami development sites. Controlling means we're locking up with options and we need money to entitle. We need $500,000, right? So I think avoiding the actual dollar amounts is going to be good. For video content, you don't promoting the rules still apply, but you want to follow a key principle. Exciting visuals, storytelling that highlights your team's expertise, powerful hooks that grab attention. Don't promise anything, present specific financial disclaimer without a disclaimer, share confidential details, or use phrases like that. That's steering, using once in a lifetime. We're turning empty land into $1 million homes. These are hooks that I'm allowed to use, storytelling, drone shots. So it's all very done. So I asked it, what about video content? I say, if I want to book a call or to talk to accredited investors or for them to qualify, give me 50 different 15-word scripts for a Miami development I could use as an example. So we want to bunch these up into, there's hooks. Miami's luxury real estate's booming. These are general geographic. They could be geographic. We're focusing on that development focus. We're building luxury spec homes in Miami's top neighborhoods. Profit and financial focus without guarantees. We're targeting premium exits in Miami's hottest neighborhoods. Do you want in DM to review financials? Projections to review financial models. Accredited investors only. Explore Miami development opportunities with strong upside. We talked about location. We talked about accreditation focus. Accredited investors only. DM us to review our Miami development financial model. So what I'm going to start doing, because I do short form content creation and I do long form content creation, and I don't have $20 million sitting in my bank account. Now I could talk about, I have the knowledge to do high rise development. Absolutely. I'm doing mid rise and I'm negotiating with municipalities in my city. I'm attending zoning hearings already in this city. And so a lot of this is going to focus more on those. I would say, what's the closest I can get to asking for a fixed dollar amount? Or can I talk about minimum investments? I am allowed to mention minimum investments amount publicly, but must be careful. So I can say no guarantees, avoid languages that implies fixed returns, no pressure tactics, and clear disclaimers. Accredited investors only, minimum investment starting at $100,000 for ground up hotel deals. DM for financial advice. Our Miami developments require a minimum $250,000 investment. Message us to explore opportunities, right? Minimum investment's 200K. Because when I see these and when people go to trade fairs, I see these on these documents. I can have a document that does it. I can create advertising materials. I can do it. Miami spec home opportunities. Accredited investors with 150,000 plus to deploy. Let's talk. These are 10 to 15 words examples. And that's what we don't want to say. Don't say invest. Don't say only 3 spots left. Don't say guaranteed. Don't say double your money. For a credit, always use a disclaimer. If the disclaimer is in the text, would that be sufficient, but not in the video? No, having a disclaimer only in the text is not sufficient. Reg D offering. Clear and conspicuous. In the case, the disclaimer should also appear within the video itself to ensure viewers are properly informed. Display it in a text format within the video. If I don't want to say it, can I put it in a floating text? Using floating text on screen is acceptable and effective method to display 506C Reg D disclaimers, providing it's clear, conspicuous, and properly positioned. On a 8-second short form content that says it's minimum investment and we are raising for a $20 million land plot. Give me 10 examples of acceptable scripts with minimum investments of 250K and that are SEC compliant and what the text should show. So this is what we're talking about. If I want to solicit to the public, right now we have over 2,000 people a day looking at our videos, and I just started my YouTube channel in Miami. And if I want to raise, this is a market that I want to enter, and I don't think I'm going to have $20 million in cash before I could raise that amount of money. So with my knowledge and experience and a strong team, I can raise for an SPV. I could set up an SPV and do it. Clearly mention that it's for accredited investors only. Disclaimer text visible for at least 3 to 5 seconds. No disclaimers. We're raising 20 million Miami land we're raising for a $20 million land development in downtown Miami. Minimum investments are $250,000. DM us now. And then on screen say was like for accredited investors only. This is not an offer to sell securities. Accredited investors only. What is the SEC minimum words required that they have decided or the courts have? And this is the problem with raising money through virtual methods, which are the most powerful in today's day. It says that the SEC has not established a specific minimum word count, but it's substance over length. What's the 10 different shortest ways to say it? For accredited investors only, not an offer to sell securities. Accredited investors only, DM for details. For accredited investors only, investments involve risk. Accredited investors only, all offers made through official documents. For accredited investors only, DM to review financials. So it seems like the common wording is for accredited investors only, investments may lose value. It's all of these. Display a disclaimer, use clear, readable fonts, and reinforce it with it in a caption as extra. And so, yes, if you could, we can add this on the end, but the videos I do are less than 10 seconds. So I want minimum words. And you could tag it on the end of the hook and the opportunity. So now we have a new structure, which is hook, opportunity, and disclaimer, right? We're locking down a $20 million Miami land deal, $250,000 minimums, accredited investors only. It seems like accredited investors only would be a good way to do it. And if I don't want to put floating text, what is the minimum in the video? Saying accredited investors only. If you don't want to use floating text, the minimum verbal disclaimer to remain SEC compliant is accredited investors only. In the video itself, generally is sufficient for short form content under 506 Reg D rules, as long as I avoid promising returns or implying guarantees, and my caption still includes a more detailed disclaimer, which is recommended for extra protection. So if I tag on, again, hook, opportunity, disclaimer. If I do that, I do not have to put text on screen. But if I transcribe them, we're locking down Miami land, or land deals are moving quick. There's a lot of like rush to it. Place it for accredited investors only, not an offer to sell securities, DM for official offering documents. And so this is an example of, let's say I have a fake 20 million. Let's look up acre of land in Edgewater, Miami. Let's see if we can find an acre of land. And honestly, I see mispriced lands a lot on. So here is 0.7 acres, 19 million an acre. Here's 0.16 acres, which is too small. Here's 20 million an acre. Here is, and we want 0.8 acres or 0.7 acres at a minimum. I just did a video about it. So if I want to buy this site, right? And I can say, let's say I have a site that is listed publicly and we want to highlight the opportunities available. Here is the info. This isn't my development site, but we would create an SPV. And for the sake of this, it's all public. We don't have a 506C offering in Miami yet. Would that be required, or can we build a list before I incorporate? Let's see what it says. We can build it, but there are some important. Discuss opportunities in general terms. Public information, but discussing financial projection returns or specifics until I have a 506C active. So the process of making a 506C and doing a Reg D filing allows me, once I have the 506C, what does that allow me to do more specifically? It allows me not only to collect funds, but what else? It, once you have a Reg D filing, it allows you to do a lot of things. Marketing, soliciting. The biggest one is public solicitation and general advertising. I can offer my investment on TikToks, creating video content, email, no limit on fundraising amount, accredited investor only, full control over investment returns. I can set them, ownership structure, profit. I can share with high net worth individuals, freedom to use stronger language instead of we're targeting strong returns. I can't say invest, right? Increased transparency. It builds more trust because it's transparent and openly marketed. Easier access to institutional level capital. So under a 506, I can talk about financial returns. This is the biggest one, and model and have that. And it also gives me deal structures. So I can still create a strong funnel. Start by sharing Miami development insights to attract interest. That's what we're talking about. Capture leads using a website landing page with a clear join our investor list. On board with educational content. Develop engaging video content. We're raising for that, right? Disclaimers for accredited investors. Target your ad strategically. Power. We're controlling Miami's next, or we're looking to control. But before that, we want high level, and we want to seek a co-GP that is well capitalized. So our target is on diversification and well capitalized co-GP, and we perform entitlements at cost, which can generate massive returns without out-of-pocket expenses. But we want a balance sheet partner who is also a co-GP. So if I want to discuss this, right? This is a $160 units and encompassing an added density. So some of these, depending on how high you can go, these are the types of sites that you want to look at. This is a great example. This lot, I want to be more specific, and the target area in Edgewater and Wynwood is more specific. And this is an on-market play that is at or around 20 million per acre. So we want to raise enough to purchase that or any piece of land. While we raise, we can look at the availability of land in this market. Let's see what they say. Prime location advantages, exit structures. I mean, they don't target institutional level firms. Co-GP pitch. Sample scripts. Diversify into Miami's highest growth zones. Edgewater and Wynwood, we're seeking a well-capitalized co-GP partner to acquire prime land at 20 million acres. With our entitlements at cost model, we unlock returns without significant upfront cost expenses. And let them know terms, and ownership percentages are flexible. So in this, right, I don't have a fund down here. We also want to highlight that we want to create. We also want to highlight that we want to create an SPV closed to raise capital, and we will facilitate and close out capital, but we want a GP with at least a 25% contribution to the development. And then I can ask it for your advice should now emphasize closed minimum co-GP. We're creating a closed SPV for Miami land acquisitions in Edgewater and Wynwood, seeking a well-capitalized co-GP to contribute at least 25% of development equity to purchase land. Flexible terms, DM to connect. So this is highlight the SPV structure and that it's for entitlement costs and to acquire land. The SPV will be closed once we raise enough for the entire land acquisition and equity, so we can raise 20 million in the first 8 to 12 months, and after that, the rest to close the land loan, to close the ground up construction loan. I think we can get to permit in 2 years from raw acquisition of land. If we acquire within 12 months and tie up within 6, so we're going to give some additional details here. Closed SPV, highlight that the SPV is structured to raise enough for both entitlement and land. Phase capital strategy, initial goals to raise 20, with the rest coming for the ground up construction. Clear time frame. Emphasize that permits are expected within 2 years from land acquisition, assuming the site's tied up with 6 months and we close within 12. That gives us 6 to 12 months for permitting. Flexible ownership terms, 25% GP commitment, reinforce the need for well-capitalized co-GP with 25% equity contribution. And this is exactly what we're looking for. So we're structuring a closed SPV for Miami land acquisitions in Edgewater and Wynwood, seeking a co-GP with 25% equity commitment. We're raising $20 million in 8 to 12 months to secure land and cover entitlements. Permits targeted within 2 years, flexible terms. Okay, right? Now, and we won't make the SPV till we select a co-GP. So with that being said, you have to build out these models and give it a lot of information, and pre-SPV structure focus created after securing a well-capitalized exclusive right to partner, first mover advantage. We could give them, we're assembling a closed SPV for Miami land acquisitions, but we're selecting a co-GP first, seeking a well-capitalized partner with 25% contribution commitments, flexible terms. So, but this is the kind of stuff that you're saying. So partnership and milestone, urgency and flexibility, emphasize early stage co-GPs, and Yes, I think we want construction values greater than 100 million and project value post stabilization of 200 million or at 15% of land cost, assuming we buy an acre. So that would be a building that can be sold or developed and sold, and land cost is 15% of after built stabilized value. Not to mention updating the messaging. Your revised messaging should now emphasize high value development potential, highlight your target constructions, 15%. This is what it talks about. You give it more details. When can we take deposits? Deposits if it is a condo development. Do I need to own the land or just control it, or even without controlling land? You do not need to own the land to collect deposit, but we must demonstrate legal control. A signed purchase contract with contingencies or minimal contingencies, an option agreement or long-term land control. An LOI may suffice but may not. You need to file a declaration, non-binding. I'm guessing we need to have them locked up, we need to have a specific site locked up. Yes. Or non-binding, demonstrate site control. If you have no site control, market the idea, create content on future plans, project concepts, and investment strategy, build an interest list for accredited investors or condominium buyers. So I can start that right now, right? In addition, I could talk to sales teams that sell these, and I think we could start that process once we do it. Do you agree? And once we have land control, can deposits be used to acquire land? This is very technical. This is combining fundraising with in the best capital market with condominium law. Let's see here. Yes, but under strict. You can only use deposits for land after your declaration of condominium has been recorded. Even after filing, deposits will be held until they can be legally released. Florida law requires developers to provide a surety bond equal to the total amount of deposits held if those funds are being used for land acquisition. So we need probably a condominium attorney. We probably need a securities attorney. We probably need probably need to talk to the largest builders of these high-rise developments, and we need to go. So if we're going to do a hybrid hotel and condo, this is what we're talking about. What would be the various attorneys we would want to speak to, including live local for a height bonus through affordable commitments? If we do a mixed-use project and it's hotel, condos, and apartments, and we dedicate 30% of the building to this, that's going to push that's one of the biggest loopholes right now in Wynwood, because there's a 48-story tower that was just recommended. So if we want to be controversial, we can do not only condominiums, but we can also come in and be the second one. The first one was Baz Development. Recommended attorneys. Land use and zoning attorney. We have I've talked to the guy that helps write it. Real estate development attorney. I don't think we really need that. This guy could probably do the same. Construction and permitting attorney. We probably don't need that. I would say the construction firms that they have general counsels. And with my knowledge, we probably don't need it. Affordable housing. This is an incentives group. We can do that on the exterior. We probably don't need a title attorney, maybe an environmental, but I would recommend that due to some of the concerns. And what about condo attorney and a syndication or securities attorney? I can't believe we didn't recommend either of these. In addition, I think it's because you're specific, critical for pre-sales and buyer protection. So someone that's very specialized in condo developments with Chapter 718, they can draft these documents, these early phase documents that, in my opinion, would come when you have your SPV. So we'd have to talk to them a little bit and get estimates. But this would be my strategy. Syndication and securities attorney specializes in SPV 5060 offerings. Now, we might do an open-ended evergreen fund that could continue to invest. If you look at how is the largest real estate funds structured? Are any open-ended evergreen funds like the top 10 developers, or are any publicly traded in Miami that develop the most? You're in such, the answer is going to be no. I already know most of them. Evergreen fund means I can have a perpetual. I can raise for the rest of my career, and I can do sub specialties. The related group is a what structure is, let's see here. It says public. So the related group is who I'm talking about. Swire, Hong Kong, it's public. JDS is what structure are they? And public or private and open or closed, and fund or non-fund for these. Let's see what they say. See, this is crazy that they now, I don't know if Mr. George Perez is an expert, but this is the new real estate development. It says it is a closed fund and they do direct investment. It's a private entity. It does not publicly or operate through a fund. Swires is public, non-fund based, engages direct property development. Established, Swire is a leading developer, and they are listed as a public company. How big were they when they went public? $2 billion. Largest listing in Hong Kong since China, but they're doing, due to its deterioration, Swire's canceled its IPO, pursued a different approach on the stock exchange by way of introduction. And this method allowed the company shares to be traded publicly without raising new funds. EXP World Holdings. EXP became publicly traded, market cap. I don't know if they're doing development. That's a surprise. Non-fund, operates through its real estate brokerage. I want ground up developers only. So we're talking about being one of the largest developers in one of the biggest cities with project sizes that are greater than $250 million. Let's see here. Terra Group. Are these open-ended or closed, or can you invest as an investor or institution? So you'd have to look, can I put $1 million into related group? As a privately held firm does not offer public offerings, they do engage in joint ventures with institutional level investors. So theirs is very relationship driven. Ours, similar, Terra Swire Properties is public, allows individuals that it's a protecting. So that would be a Series A offering. This provides a direct investment route into their global real estate ventures. Swire, Deezer Development does not have it. Oco Group is privately held. BH Group is privately and does not offer public offerings. Wave Group is privately held. For individual investors, there's not a lot, right? Or they have to buy condos directly. If I was doing projects the size of Related Group, would you recommend a public offering or a series A that allows me to raise from all size, or how would you recommend? How would you recommend if I have the desire to develop $25 billion worth of real estate in my career, with every project being a minimum $200 million? Should I do it like these groups, or what structure that is open-ended allows the most flexible and most capital from an equity perspective for the next 40 years? If I never want to stop and I want to hire a capital raising team to secure, let's see what it would say. Open-ended evergreen fund with a hybrid model, which is what we're talking about. Incorporating SPVs or series structures ensures tailored investment control. Open-ended evergreen fund allows perpetual reinvestment, redemption, institutional level appeal. And that is the same as Blackstone Real Estate Investment Trust. For individual projects, it would be a sub, and we would be SEC compliant. Once you build a strong track record, consider launching it or publicly traded. A Reg A or IPO will allow you to raise capital from both accredited and retail. Going public provides long-term equity access. Establish an evergreen fund, launch SPVs, explore public offering. That's consider launching a REIT or publicly listed. If I bring in direct investments from partners who develop in the market already, and they become on the board or move holdings into this, what early stage structure would be best? Would it be a Series A, since I expect to go public, and we can raise the amount of money needed for the first site, which could be 20 to 60 million. If you want to do $1 billion project like Aston Martin, that land costs a lot. A Series A fundraising round, Series LLC or hold co-structure. Series A, ideal for raising, can be structured as pref equity, provides equity without immediate public offerings. That holding company with a series, establish a hold co as a parent entity to control your individual investment projects. Use series and that structure board. What is the SEC required filings? Let's see what this says. So if we're talking about launching a Series A, we probably wouldn't do a 506C actually. What is the other option if it's not a 506B or 506C? And we want to offer public solicitation. Isn't there another one like for crowdfunding as well? So we want the largest buyer pool. We want individuals. If you're exploring capital raising, the Reg A this is what I'm talking about, known as a mini IPO. This exemption allows you to raise capital from both accredited and non-accredited. Tier 1, tier 2 would be ours. and that would probably be ideal for extensive upfront. How much are the legal costs? I think for the size of the development, it may make sense, and the amount we need to raise. An acre in Brickell can cost up to 100 million. So if I want to do this, right, if I want to estimate legal costs, I would say it's probably going to be $100,000. If I do a private PPM, Form D, operating agreement, investor sub agreement, and general legal fees, 20 to 40. A Reg A mini IPO, it's going to be a lot more, 65. But this is going to allow us to do it. Regulation crowdfunding for up to 5 million in retail focused round. Form C, that REIT for long-term development, $100,000 to $200,000. So for that exact reason, for IPO or direct leasing, for long-term public growth, it's going to be even more than that. Recommended strategy. Since we're targeting land priced at that, a Reg A structure may offer the best balance, raising significant equity early, marketing flexibility, positioning your platform for a future IPO. Suggested, launch a Reg D 506C for the initial raise, expand to Reg A to unlock broader investor pools. I'd say Reg A plus is better due to size and us wanting to go public. What do you think? So if my strategy is specifically to do $1 billion building, choosing Reg A for raising 20 to 60 and scaling to that, ultimately positioning for a public offering. If I want to be Swire Properties, there's a higher capital raising ceiling. And it says marketing, unlike you can aggressively promote your offering through social media, email, paid, video to reach a broader audience, accredited and non-accredited. I can raise money from anybody, right? And I can issue shares of class. It's also IPO ready, which is exactly right. Reg A plus issuers can list directly on NASDAQ for post-offering, simplifying your transition to a full IPO when you're ready. Investor liquidity advantage. Reg A plus shares are freely tradable post-offering, giving them the ability to exit, which is different than traditional. Recommended and engage a securities offering with expertise in Reg A to draft your Form 1A filing. Develop an aggressive marketing. Use your Reg A. Estimated legal costs. To do that, it says 65 to 150,000. Audit prep, offering circular marketing trends. Position your Reg A as a premium opportunity with compelling narratives because we're going vertical, right? And people can invest in it as well. And we can also raise condo deposits. But if my first development, I want to be $1 billion, I think I need an acre in an unlimited height district, which would be downtown Miami or Wynwood or Edgewater or Brickell. Downtown is probably the cheapest. Let's see here what they say. If I want to do a $1 billion on an acre, which is Aston Martin, here's a comprehensive. Since you're targeting unlimited height districts, we should focus on this. Prioritize downtown. $1 billion initial land and pre-development costs, which is what we're talking about, 20 to 60 million. Construction capital, I can continue to raise that, or I can do debt. I can also raise it through condo projects, land acquisitions. We need T680, unlimited height, T680. So a real estate agent who specializes in those things is what we want. I don't really care about too much about the opportunity zone, but there might be some of that stuff. And in addition, we also want mixed use, luxury, hotel, retail, and we also want to do affordable housing commitments. So identify 3 to 5 target parcels in downtown Miami's T680 zoning. So downtown Miami land for sale. Let's just take a look. For an unlimited height district, how much is a piece of land? Because this is about capital raising in Miami, Florida. And this is the first video that we're doing that someone could watch. Let's see here. If you truly want unlimited height, it's going to be downtown right here. Let's see how much these are going for. 7 million, 3 million. That's 40 million an acre. This is no price. This is half an acre, no price. And you can see who's specializing in this stuff. It's Collier's. And let's see what this one is. Price upon request. We wouldn't want to be there. We could go to Edgewater too. Price upon request. Price upon request. 13 million. Where's that? Let's see here. Still too small. You really want an acre. 5 million for 0.23. Here's 25 million in Wynwood. So, and this is going to give you the price per acre if you're looking at it. In Wynwood, where now you can go higher. It's T50, which I wouldn't even touch. Not even close. No thanks. Let's see what else here. You're going to be a lot higher around here. That's an acre, no price. That's a half an acre. You really want to be on the right side of the street. So that's why you work with a zoning attorney who's going to help you. And why raising these funds, it's gonna be a lot. This pre-development stuff is going to cost a lot of money. There's going to be a lot of legal fees involved with it. Let's check this out. Surrounded by within an opportunity zone, 27,000 square feet of development. We can pull down the brochure and see how much they want. Let's see here. T612. Oh, and let's see what 150 units an acre, 12 stories, 20 stories with bonuses. And in addition, I don't even think that does a live local exemption that would force density even higher. So this isn't bad. You have to look at the max floor plate. And this is kind of what you want to look at, right? This is the lot square feet, sale price, the zoning, and how much it went per unit. Price per square foot of land. And this is how you start to develop these types of things, right? So you start to really become an expert and you start to understand right here what you're getting. We would do a lot smaller stuff, but there's a lot of strategy. But the number one thing that if you actually buy an unlimited height district, truly unlimited, more like downtown here, right? If you look at the zoning, let's just look at the biggest site here. Let's see what this is. This is a 2-acre lot. Let's actually see how much this is. This has 2 acres, right? Flagler Central, redevelopment, downtown's vibrant core. The property benefit from T680, 21st most liberal designations and downtown density overlays, which is what we're talking about. And it also has the highest density, which is 1,000 units per acre. Maximum building gross plate of 3.9 million square feet. Now we're talking, okay? Now there's no price on this lot, but you would want 1 acre. So depending on what this is, we'll put my information in here. There's not that many sites, but you start looking at these types of sites and going through them and saying, everyone's going to say, hey, you're a FACO. And that's that. But you turn in a message and you could probably chop it up. This might be an assemblage. This is quite a large site. And that's exactly what they're pointing out here, right? But it's hard to say. I don't have the OM. And so you want to start looking at all of those things. But if there's anything that I've learned, you in 40 minutes of you guys watching, you just saw someone who's an expert put together a fundraising strategy to go public. If you want to be Swire, right? If you look at the development costs, how much is the development cost on casinos in Vegas most recently? You're talking about these scale of developments, and these are done by publicly traded companies, Resorts World was 4 billion. Durango, $700 million. Are these companies public? MGM, Boyd, these are public casinos, right? And they have other things. So within your development, these are billions. And this is the problem. How much is an acre of land in Las Vegas on the strip per acre? It's probably it's similar. These are a 2-acre plot, a 2-acre sold for 12 million or nearly 6 million. You can see how they're up to 40 million in acres. So if you look at large development trends and you see how much an acre is in an unlimited height district, you are in a tier 1 city and in the #1 net migration, and you have to set up a structure that allows you to raise more funds than you have ever done. And we're in the city. If I'm raising in Miami for a project in Miami, most development is local. It's why I moved here. So as we start to do this, you can see why you need a balance sheet partner, because I can't even raise $1 without spending $350,000. And that's quite some time. I'd have to build a lot of houses to get there. Could I get there in a few years? Sure. But I can also start advertising for that. So because of these things, the best thing that you can do is to start it. So if you guys have interest, reach out. Okay. This is what a series. So what is my first step? Get the quote from the best securities company if I want to do developments at 1 billion each. It sounds like eventually I'd need to go public. And that would be, these are some of the most expensive firms, I'm guarantee you. Plan your co-GP partner to bring 25% of the equity and set it up, right? And some of those would be target firms with that align with that. So unlimited height districts, 100 million per acre. This is again just repeating me back what I said. But use a Reg A to raise your initial. So this is your steps, right? Reach out to a top securities firm to request a quote on developing a Reg A plus SPV for an IPO down the road. And that's only because you're bigger than banks. These loans are the largest ever. These are the largest loans ever. And because of that, how big are companies when they typically go public? Market cap at IPO, revenue at IPO. You see how all these are, even large caps are 500 million. Given that we want to start with a $1 billion project, you're likely aiming for mid to large cap status when going public, probably mid. So if I record this development as our revenue and the condo sales as the revenue, it would mean my revenue would be 1 billion and my cost 500 million, which is why I'm targeting a pre-IPO offering. A pre-IPO offering over the other structures. Leveraging the high value nature gives me it aligns strongly. Recording $1 billion developments as revenue while targeting 500 million presents a strong financial model that makes a pre-IPO offering particularly effective. That's just to do one project. By structuring each $1 billion project as revenue, you present a growth story that mirrors top-tier developers. Our investors are drawn to strong top-line growth, and seeing 1 billion annual revenue early enhances it. With your targeted, these are just done, but this isn't quite what it does. But looking at pre-sales incentive, financing, and all these other arms, there are people that will bend all over this. Since IPOs are driven by revenue multiples, presenting 1 billion in project, for example, the market value is at 3x, you could own 3 billion. And we can use the construction value to lower costs and negotiate with the largest construction firms in the country. Right, and that means that we can spend Clark, Suffolk, White, Turner, who built high rises in Miami. These firms aren't building the white. These aren't the firms building high rises. Not even close. Neither is related. Those are the developers, but here's the builders. Coastal Construction, Moss. These are the companies that you want. Yes, my goal is one development per year, I think. And the open-ended, can a fund be open-ended as well? That is a pre-IPO. A plus. Since it has no closing date, scale efficiently, leverage liquidity events, flexible capital deployment, attract long-term investors, series or a master feeder investment returns. Can you draft an overall document that I would give to a securities attorney that describes all of this together? That is very exhaustive and gives them a good idea of the structure. Each 500 million to $1 billion project would be a separate sub LLC, and the land we target would need to offer at least a 3x post entitlement. So we would target land that we can upzone through entitlements and get values higher. More than likely, that is land between 10 million and 50 million an acre. So we're looking for that $20 million mispriced piece of land that's in Wynwood. That, for example, Wynwood's a great example where we can. This is a development and fund structure. This is master fund, Reg A offering open-ended, series LLC, compartmentalized, the open-ended structure, continuous fundraising, 500 million to $1 billion, 25% from a co-GP, target land. It was that upzoning potential with 3x, revenue and valuation strategy. And don't forget the use of condo deposits to recapitalize post-construction or post-land acquisition as a recapitalization method. So what we're saying is once I raise that money, this is one of the only states that I can do this, and it's one of the only states that I can do live local set-asides as well. Condo deposits, and don't forget live local as one of the main tools for site acquisition. Like there was a recent one in Wynwood by, let's see here, Baz Development, 48 stories. This was last year. I wonder where it's at now. And it looks like it hit some kind of
important security message.
If that's not how to scam, I don't know what does. Baz Development, Wynwood. Let's see what the latest news on this one. They propose tallest tower using live local. And let's go back. Let's see here. And I think they've owned this site for quite some time. So once you close on the site, simplistic and unremarkable. These sites have so much garbage, it's crazy. But there hasn't really been much announced, but they proposed basically through the Live Local. This is probably about destroying Wynwood. There you go. So you see they barely have anybody. And we can see if they answer. 2454867. Let's see if they answer. But this is the example that you would want to use if you want to fight.
Your message for Albert Price.
Hey Albert, my name is Rob Ellis. We're getting ready to push Live Local in Wynwood, just like you guys, setting the tone. I'm used to fighting municipalities, and we're looking at a structure that allows us to raise the capital to go vertical on a 40 to 60 story site. We were talking a little bit closer to 1 million square feet. You guys have 750,000, it looks like. And I was just wanted to speak about the development. If you give me a call back, I'd appreciate it. And it looks like you guys have 1.5 acres here, and would just love to chat. Hopefully you guys have moved forward. I haven't seen much on the project in a couple months, so I was hoping to see what the latest is. So if you talk about that, right, and you bring it up to, it was very controversial, but this sat on 1.5 acres that they probably got from quite some time ago. So in Wynwood, you can use this as case study under the Live Local area. So it's going to rewrite it and just say, these are all the tools that are available. In my state, we're not a condo state. We don't collect condo deposits. In my state, we don't have billion-dollar projects. In my state, we don't have Live Local in Columbus, where I moved from. I moved here for this right here. And why not do the largest possible? Because I've got some of the smartest people, and this is our overall strategy that talks about it, you know. So this would be a early structure of a fund. This would be how you guys would look at this. And unless you have my experience, I wouldn't recommend pulling this out, but you could try. And that's everything. So I hope you guys enjoyed the video. Have a good one.